Welcome back to Squawk Box this morning. Carvana benefiting from the strong used car market in its most recent quarter. Total gross profit was up 145% from last year. Revenue more than doubled, and retail units sold increased 76%. Joining us right now is Ernie Garcia. He is the CEO and founder of Carvana. And it's great to see you this morning. And I think the big question that the marketplace is trying to figure out is just, you know, is this a pull forward of demand, or is this the future at this point?
Well, we're really happy with the quarter. And more importantly, I think the way the business is going in general. In the quarter, you said we grew gross profit by 140%. We grew, retail sales by 76%. We grew cars bought from customers by well over 100%. Overall, we grew revenue by 100%. So, last year in Q1, we did about $1 billion in revenue. This year in Q1, we did well over $2 billion in revenue. So we're growing really quickly. This is clearly something the customers want, and we're growing into that and working hard.
But in terms of just the overall car market right now, you have the manufacturers starting to actually manufacture more vehicles that are going to come online. How's that going to change the equation over time?
So, there's all kinds of unique things that are happening right now. But I think importantly, if we look forward over many, many years, what we think is most important is, we're building this entirely new infrastructure. We've got a logistics network. We've got these inspection and recertification centers across the country. We have 12 of them. We take a car, we put about $1,000 of parts and labor into that car, and we prepare it for our customers. We've got a website that's fully transactional. We can deliver the car to the customer and give them a great experience. And that's an infrastructure that doesn't really exist in the U.S. today. That's really, really valuable and delivers a different kind of customer experience. So I think around the country, around the industry, different people are starting to recognize that customers want to buy cars in this way. But it's a lot of work. We've been at this for 8 years.
Right.
We've been growing really quickly because of the customer adoption of that experience. So we're really excited about where we are.
Ernie, I think what the investor class is trying to figure out right now is there's sort of a macro picture of what's happening in the economy, obviously, but a macro picture, even what's happening in the used car market or even the new car market and the used car market. And then there's you and companies like yours that are pulling market share away from the incumbents, right? And so they're trying to figure out how much of this is pulling from others effectively, right? Because you're doing it better and you have a new model, and how much of it is the macro picture of what's going on in the context of people buying new cars, having access to new cars versus having access to used cars and the like. Sure.
So I think it is mostly the former. I think, in fact, a good way to think about that, because there's so much happening right now. If we go back to Q1 of 2019, and we look from Q1 2019, which is pre-pandemic, obviously, to Q1 2021, overall used retail sales were basically flat. But during that period, Carvana grew by 2.5 times. We grew GPU by $1,200. We've kind of levered EBITDA margin by on the order of 1,000%. So we've grown really, really quickly across that time while the market's been flat. And so I think that what that suggests is that this is a transition of the way customers are buying cars. Now, all that said, last quarter we were still only 1% of this market, a little bit less than 1%, in fact. So it's a really, really large market. There's 40 million transactions annually, and so there's a lot to grow into. But I do think this is more of a transition. The market size itself is not shifting that quickly. Right.
And then what happens in your mind as we transition to EVs? So you're going to have new manufacturing of EVs. That's going to probably pull a whole new customer base into that potentially both creates opportunity for you in the combustion engine cars, but I assume it's also going to create questions around the valuations of those cars and frankly, the interest in those cars over time.
Sure. So I think, we think EV is a huge opportunity for us. We've got a really broad customer base when you look across demographics, but we do, skew a little bit young. We skew a little bit in the direction of the types of buyers that are more likely to be interested in electric vehicles. And when you kind of think about the used car market, the entire infrastructure and apparatus of the used car market is really about customers swapping cars. Every car is already out there. It's driven by some other customer. And then when that customer decides that they, want a new car, they're trading in the car they had before and they're going and getting another one. So our role is to sit in the middle and try to do that as efficiently as possible and deliver great experiences to customers. And really, if it's a combustion engine car or an electric car, not that much changes for us.
Do you think, though, there's going to be a moment where there's going to be a real shift in terms of even the value of how people buy combustion engine cars, meaning saying to themselves, you know what, it used to be that if I bought this car and I look in the blue book 5-6 years later, there was going to be real value here. But if the whole world moves to electric, actually they're not going to have the same value that they did. Therefore, the price that the manufacturer is charging now isn't going to make the same kind of sense?
So I think that's certainly possible. It's not hard to tell yourself that kind of a story. I'll say, we went public in 2017. At that time, that was the big question. The big question was, is all this kind of technological innovation in the physical vehicle itself going to cause depreciation rates to go up rapidly for all the existing vehicles that don't have the same technology? And, so far we haven't seen a big discontinuous change in the way the cars are valued. Maybe in the future there will be a discontinuous change in the underlying technology that would drive that kind of rapid depreciation, but we haven't seen it so far. And I do think that'll certainly be something interesting that we'll follow very closely. But for our business model, which is about delivering great experience to customers when they're swapping from one car to the next, I don't think those are major drivers of what we do.
Shepard Smith here. Thanks for watching CNBC on YouTube.